It's a nice day. It's a really nice day. How you doing? It's Daniel Rashid. I'm on to make another video about my thoughts on where I would buy a multi-unit, especially during these times where we're seeing a few things happen. So stay tuned. All right, so where would I buy my first sort of investment or multi-unit? And basically, what would I buy? If you're just getting into the game, obviously, you know, there's only a certain cap or a certain amount of units you probably could buy, unless you're partnering up with somebody to purchase something, which is always a smart thing to do. You could do that through a partnership, sort of a 50-50 relationship. It's really important to evaluate, you know, what each other's responsibilities are. Does one person hold the money and the other person manage the property in its entirety? Or do does that person have some strengths in construction and you guys can split those responsibilities? That's just a real quick overview. If you're getting into a partnership with somebody, you really want to outline that on paper or whatever form of media you feel is necessary. And both of you, should be obliged to commit to those responsibilities. That's the only way a partnership would work on an investment, because things can go really sour if one party feels that the other party's not really living up to their responsibilities. Just like a roommate. If you had a really bad roommate who was maybe good at first and then started not doing the dishes and it got you upset, dish pit's always full, then you technically probably just move out, or, you work it out and you both go your separate ways because it's all about the dishes. Probably more to it than that would cause someone to move out, but you get the idea. With a partnership, the relationship has to be good if you're investing together with somebody. There's a lot of different models in using other people's money to invest in a project. Plenty of people do it. For your first investment, you need experience in the game. Like if you're gonna be, unless someone's really nice to you and they really trust you, they could probably help you out with an investment and then partner up with you, or start a company with you, or pool some assets with you on a project. But if you're putting together a project, an image of, quite a development, and you're asking for other people's money with no experience, it's really going to be hard to convince those folks to lend you, money based on a return, based on your lack of experience. I'm getting into something completely different, but at the end of the day, that's where that vehicle would look like in terms of if you're like trying to pull together investors. Again, you need experience, so you got to start somewhere. So pick up something, buy something, and focus in on getting your boots on the ground. Work for a company that's doing big things. A lot of people here, on the East Coast that are doing big things. There's plenty of companies that are involved with huge projects, huge pooled fund projects, construction projects that you could get a lot of experience, and then you go and you do or ask for other people's money at that time. All right, the whole reason why I made this video was to talk about location of my multi-unit. There's a few factors at play here. Currently, our local market, and much like your market likely, is that there's a lot of inventory hitting the market. I know locally in the last week, there's like 766 listings, if I'm not mistaken, that hit the market. That's a lot for a little island with our populations like 140 some thousand. So that's a lot of listings, and it's it's getting to a point where this market's going through its phase. A lot more inventory is hitting the market. You're seeing a lot more vacancy kind of come up on the outer city limits, and that's where I wouldn't buy. But your market may be different. I would stay close to the city center. It's obviously more expensive. Districts that they're close to schools. Hospital is a big player, close to a hospital, because you'll get a lot of working professionals. The longevity of property close to those, main vital parts of a city, for your rentals there, they would always hold longevity. For the longest time, there was a certain area here that wasn't really highly valued, and now it's changed over and it's very highly valued now, just because of its proximity to schools, highway, hospitals, and and just government offices in general. So you see a lot of that that longevity happening in those kind of investments, and that's where I would pull my money to purchase. I love the downtown core beside colleges or universities, just because, you know, I know the student rentals sometimes not the best sort of asset to hold for students, but students are, you know, they're young professionals trying to get through, and you providing a good place to live and laying out the ground rules of your rental in terms of what your expectations are. I've never had really that much trouble with folks. So my communication with my tenants, we can get into property management some other time. That's another thing. You should manage your property for a little bit before you hire somebody. But you know, when I'm renting to a potential tenant, I'm very clear on what my expectations are as a owner or landlord, and they know that up front. We sign off on it, we evaluate, and just make sure everything is clear up front. And then there's no gray area or no situations that usually arise from, hey, I didn't know that. Yeah, you know, it's usually a check, and then, you know, things do naturally work themselves out after, you know, maybe you have to re-communicate. But point being, student rentals are definitely something not to be afraid of. These are young working professionals. They're going to do whatever it takes to get to their class, live comfortably, and work to their way to the top kind of thing. So get their diploma, get their education. So these students are definitely ones to be you know, treated with respect, and just like anybody else would be. But they make for a great return on your investment in your districts, just because they need places to live close to the proximity of the school, and usually the dorms are very expensive. So anything school oriented are very expensive in terms of stays for students. So again, close to hospitals, schools, government offices, and you know, proximities to highway. Generally where the main populace is circulating, your rental will do well. It will hold, it will be indestructible. And that's what kind of rental you want. You want an indestructible rental that you know, you don't have to really worry about, you know, what's going to happen tomorrow, because you'll always be able to rent it. That's basically it. I would be careful investing in new construction for rental, new construction in general on the outskirt of the city, outskirt of the city. I'd be careful to invest in those areas, just because there's a lot of development happening. You know, everyone knows it. You know, the cost of construction costs is increasing for a reason. There's demand for product. There's demand not only from COVID, but the actual construction happening is insane. So there's a ton of construction happening, and we are going to get to a point where we're overdeveloped. You're already seeing listings kind of fly onto the market. Yes, inventory is low, but there's still a high volume. Inventory is low in certain areas like the city, but there's high volumes coming on across the market. And we're going to run into some issues likely later. So be smart about where you're buying. Location is key, of course. You know, you've heard it from me, from everyone before. Location, location, location. But it's definitely key in your investment. Be smart where you're investing. If you have any questions or concerns, or you're looking at a place right now, don't care what market it is, I can analyze it, send it along, and I'll definitely give you my feedback and what I think of that particular investment. I'd be shooting for like a 6% cap at least these days. It's going to be hard to get. And then I'd be evaluating. Stop. So cap rates, I'd be shooting for like at least a 6% cap on my investments these days. You know, the average right now in some areas in the East Coast is like 4%, which is horrible. You don't want to, I don't know, you don't want to invest in a 4%. It's just too much work involved. It's a great return compared to some vehicles for financial investment, but real estate has a lot of gray areas. It does a lot of problems. You have to manage it. It's not so much a paper asset that you can kind of hold your boots on the ground. Not a paper asset, but like sort of a stock or investment that way that you can hold. You're going to be the boots on the ground. There's going to be a lot of things that come up that are going to be variable in your investment, and be smart about what you're getting into. At least make sure your cash on cash is there and your cap rate is there. Again, I can analyze that stuff with you. If you have any questions, just ask me. and I'll leave it at that. You guys have a great day. Enjoy the sun if you have it, and take care.